We have again many presentations lined up for upskilling ourselves today, and the beautiful topic is qualified financial advisors, the future. And that's really the future, because I think everyone believes education is the most powerful weapon that one can use. This is the quote from Nelson Mandela, which emphasized the transformative power of education, inspiring financial advisors to continuously learn and upskill themselves as we are making a positive change in our client's life. On this note, let's welcome Mr. Bhanushali and get the much needed spark to upskill ourselves, as upskilling is a necessity and not an option. So sir is here with us today. Mr. Keval Bhanushali, co-founder and chief executive at One Finance, a young CEO with decades of proven industry experience. Mr. Keval Bhanushali is an IIM and Harvard Business School alumnus. Welcome, sir, to the stage and the presentation. Big round of applause for the sir, please. Thank you so much.
Good afternoon, everyone. I think we are just arriving at noon. So, good afternoon and a good day to start today's, this convention. I think Akshay Tritiya. So, Akshay Tritiya ki hardik shubhkamnaएं sabhi ko and Eid Mubarak. Really happy to be here. So, I'll just start the presentation and I make a promise, not more than 10 slides. Okay, so we'll try to finish it as quickly as possible. Not a huge fan of presentations personally, so we'll try to keep it as quick and easy. This is a quick rundown in the history, as in how the evolution of trust has happened in financial industry. Whenever we talk about financial industry, the first question that comes in a customer's mind is trust, right? Because you're trusting them with a lot of money. Each institution is required to acquire that level of trust from their customers, okay? So in 1980s, if you look at it, the national banks, backed by government, PSUs, they kind of commanded trust from the customers. In 1990s, we saw liberalization, we saw private banks, foreign banks coming in. So this is, again, the trust is in the hierarchical format, okay? In 2000s, we saw extreme privatization, tech and innovation. So the best of the leading private banks today, they were all, incorporated in early 2000s. And that's where the shift started happening. The whole power of compliance kicked in, because the moment privatization started leading, there were need of regulators, there were need of improved regulations. Iske pehle it was mostly about government organizations, so didn't really have to regulate them much. After that, we have skipped 2010s because we have kind of merged it in 2020s. Right now, if you look at it, transparency has overtaken the whole PSU and the latest kind of new generation users. They value transparency because that gives them empowerment. So earlier in our erstwhile generation, a very common thing would be who are the promoters, if it's a nationalized bank, if it's a nationalized institution, that automatically had that level of credibility attached to it. But the next generation that's coming in, or even the millennials and the Gen Zs that are there, they believe in transparency, and because that gives them empowerment. So that need of trust is diminishing from being backed by to being empowered by, okay? What is leading this change is compliance. I know a lot of us here don't really like compliance and regulators much in the normal day-to-day context, but in limited experience and understanding of global economies, any country that has got great compliance and a consistent improvement in regulations have always witnessed more trust from the investors and users, eventually leading to a much larger consumption pattern. I mean, that is true for education field, that is true for food, especially, all kind of, the moment any regulator is there in any kind of food business, you realize that they are more credible and the consumption increases worldwide. So just to give you a small example here, because that's where, I had started my journey into finance when we were talking about my individual journey, of course. not at the family level, but when you look at the 2006-7 era kind of stuff, when PAN cards were introduced, I was growing with that conversation कि अब PAN card आ गया है, अब तो कौन stock market में काम करेगा, कौन investment करेगा, it's all going to not be there. Just look at the growth year on year after that. I don't have to tell you anything. All of you are more experienced here, and data is something which is, we are in the age of data, so right, I mean everybody picks up couple of statistics from their pockets and throws around, so I'll not like to do that. So there are 11 crore demat accounts, not unique demat accounts. I don't know what is the obsession with the regulators to report number of folios and number of demat accounts and not report number of unique investors at times, but yeah, good in that sense. So what is the point that we are trying to make here, staying relevant in the Indian financial ecosystem? There are different kind of companies that we see that are being mushrooming and already there or growing at inflection points. Distribution, which is definitely considering India a country which is technically representing almost 25% of the youth population of the world right now. Oh, you want me to see here? Yeah, sure. No, I've made it personally, so I just. Sure. So this is more about, from distribution arms to product companies, manufacturers, and advisory. I think these are the three broad categories that we see are being carved out. They are there in every economy, again, not going to round and round. The basic transition that everybody needs to do is from relationship managers to qualified financial advisors, and this whole concept of online or offline to omni-channel. I think this is the writing on the wall that I'll also try to give one small example that I had witnessed, while I was doing some of my case studies earlier in my academic life. In India in 80s, there were close to around 8 lakhs or 9 lakh medical practitioners. I mean, people who would legally practice the business of medicine, and versus which there were around 70,000 odd qualified medical practitioners. I mean, they were people who actually were holding a degree of an MBBS, MD, or a doctor, or a chemist, pharmacist, who were actually qualified to practice, versus people who were practicing. So you had people who were into different kind of unregulated space of self-taught Ayurveda, self-taught Hakims, and self-taught different kind of streams. They were all calling themselves doctors, right? And then came a very stringent regulation that stopped them from doing that. And so no longer anybody can't just go out there and call themselves a particular doctor, right? You need to have certain set of qualifications and degrees which are credible from the issuing authority. Only then you can prefix the term doctor in front of your name. So that is something which happens to every profession. It has happened to doctors, it has happened to lawyers, it has happened to chartered accountants, and that is what that is what we see happening into financial services industry. We believe that qualified financial advisory is definitely going to take a larger piece of growth in terms of percentage. And what are the things that we mean when we talk about qualified financial advisors is what we are going to see now. Regulators undercurrent, again, every day, I think last 3 months, I don't even have to say, all of you already know the kind of regulations that are there to ensure that transparency in commissions is being brought, and that separates distribution from advisory. So people who are genuinely wanting to be distributors, they can very well go out there, and because India is a land of at least 5 countries, I always say that. Also that demographic we'll see ahead. Mutual fund, insurance, AIF, PMS, we have seen all of it from upfront to trail commissions, commissions being regulated, being transparent. The most important recent, uptrend or the regulatory movement that we have seen is mandating direct plans in insurance. So on an average, around 55-60,000 crores of commissions is what insurance industry pays in a year. I mean, I'm not saying that that's all going to go out and all, but definitely, I mean, to equate it, the overall mutual fund AUM size versus the insurance AUM size, we all know the differences, we all know the kind of penetrations and distributions that's there. So there's a lot of scope for fee-only advisors, qualified advisors, who now can also help customers save money on direct plans on all these asset and investment classes. This is again one of the demographics, and I would request all of you to see few of these numbers with a pinch of salt, because it is extremely unfair to look at India as one country when you talk about business and psychology. Okay, we are a country of brothers and sisters living together in that sense, but when you talk about the demographics, you cannot compare a $600 per capita income state to somewhere, a city like Mumbai, where the per capita stands around 6,500 crore, and also the most important thing is the number of people that are working in a city like Bombay, Bangalore. They are as big as any of the European nations, right? UK today has a working population of around roughly 2 crores, and Bombay claims to have working population of somewhere around 1.2 crores, right? So you can't really think of a city like Bombay or a Bangalore that's just one city. The kind of power, the kind of investors and the kind of individuals that are there is pretty high. So every city has to be looked in a very different way. That is something that we want to tell you. Having said that, we are definitely the youngest country, going to see a lot of growth in terms of MNIs, aspirations, and people who want to be in control. So as per few statistics, we are going to have 14 crore household, and these are households, okay? So at an individual level, you can add 3 people in a single household at an MNI network. So that's where we are focused as an organization, One Finance. We are focused on the MNI segment. We believe that for the ultra rich, there is a different game, there is a different need. You can't really look at them in the same lens that you are looking at MNIs, and you can't really look at the next Gen Zs and millennials or the first time investors with the same offerings and same lens. So we are focused on building an institution for MNIs for the next 10, 20 years in India, and going to last for a century. Age group, 60% of our age group is going to be, again, some numbers. See, the most important part here is the retiring population. This is something which is very close to our hearts. Even when Jeet and I, we were talking, we see a lot of, rich countries where suddenly people are returning to workforce after an age of 60, 65, 70, because what they were planning in their 40s is maybe a 10 crore corpus is going to be more than enough for me to live a great life in Singapore. And, the returns are never going to be in 2 digits for a period of 30 years, right? So anybody who is planning their retirement in their 40s today, FIRE is a very catchy word these days. And we see a lot of youngsters picking that up and saying that, I want to retire early, and making some kind of assumptions. So I think those are the areas where these advisors need to be very cautious about. And 30 crore people retiring, it's a big population. So we need to be more careful about what we are advising them and how we are going to plan about it. Current financial split number, it's out there. Qualified number is extremely poor in India. This is something which we are working on. We are going to work with organizations like AAFM, and that's why we are here. We wish to at least grow 10,000 chartered wealth management personals in the span of next 3 to 4 years, along with AAFM, and that's what our objective is. We believe that the new workforce is going to come in with required qualifications. Addressing the need, who is a QFA, CFP, CWM, CFA, CA, all the prescribed ones, and practices holistic financial planning. Again, I would say that most of us believe investment planning is, liability planning is completely missed out when it comes to financial planning. So at One Finance, that's what we are going to do. Difference between a QFA and a normal finance RIA, right? So there is a regulation stress which comes when you become an independent advisor or an independent RIA. capping of client earnings. So of course I'm not going to discuss the model in detail, but that's the long and short of what we are doing. We are trying to bridge that gap of different regulatory frameworks, like a CFP or a CWM requires a 3 years experience. अब वो business नहीं करेगा तो experience कैसे लेगा, और experience नहीं लेगा तो business नहीं कर सकता है. Those are the kind of regulatory challenges which we are mitigating by this platform and the overall ecosystem. Right? Last slide. Distributors or QFA, all the time I listen to it a lot more. कि distribution नहीं चलेगा, QF सारे लोग advisor हो जाएंगे, and somewhere the people are like, no, distribution is very important, everybody can't afford an advisor. Of course that's true. It is always going to be distributor plus QFA. So all big distributors will eventually start having their own advisory arm, and that's how we see this business evolving. We can, see you at our booth. I think that's booth number 17. And just one last 30 seconds, if I may. All of you can download the One Finance app. We are the only fintech in the world right now to be awarded a psychology patent. So a lot of scientists and other people have come together to do that assessment. It's there on our One Finance app, and we have been granted India patent. Our US patent is on its way. So we would request all of you to download the app, check the assessment. We have tried to eliminate the basic question that all of us always ask the customer, what is your risk appetite? I mean, मेरा risk appetite मेरे को भी नहीं पता है. Right? How do I behave? What do I do? In what circumstances? I mean, today I might want to take a risk of 2 crore rupees, but tomorrow if I lose money in my company, my risk appetite becomes zero, right? What would be my first reaction? And that reaction can be factored in only by realistic replies and not idealistic assessment. So whenever we ask a direct question to anyone, the response is always idealistic. This is based on the framework called as Big Factor 5 Personalities by Dr. Louis Goldberg. It's one of the largest practiced psychology framework in the world, and we have been able to crack that for the financial personality. So request all of you to take that and give your feedback, please. Thank you.
Thank you, Keval sir, for a wonderful presentation motivating us to become QFA qualified financial advisors. And congratulations to the team of One Finance. Under your leadership, they have become such a largest fintech company. So we are changing the pattern now. Since we are getting a lot of missing names in the bowl, he will directly throw the question and you will raise hand. Whosoever knows it, answers it. Let it be this way. So one question to the participants. It's an open forum. You can raise hand and answer the question.
I don't know, I mean, what is QFA? I mean, anybody can give me a full form of QFA. I'll be more than happy. Because it's always a risk, right? We try to coin a new term. Coining a new term is always, smarter in the hindsight if it works, and stupid in the hindsight if it doesn't. So, let me just do an experiment. Yes, please, sir.
Qualified financial advisor.
Thank you so much. And I also saw a lot of hands, so I really thank all of you.
Now he will pick up the gift. Let's see what he picks up.
Okay, I pick up the gift?
Yeah, you have to pick up the gift for him. So sometimes the game changes in a minute.
Enough, you got whatever you choose for.
That's what I'm saying, game changes in a minute. Sir, Deepak sir, please on the stage, yeah. Thank you, sir.
Thank you.
Thank you, Deepak sir. Mr. Keval, for gracing the moment.
Thank you so much.